So I have sold all my shares in Zomato. The question is why? Why did I sell all my shares in Zomato? Last week I made a video talking about the stock and I bought the stock on 4th of December and I sold on 11th of December. So hardly 7 days I have kept the stock. So I would first encourage you to watch that video last week. On the thumbnail, it is written Zomato entry, and in the title, I have written why did I buy Zomato. So if you watch that video, in that video, I explain why did I buy the stock on 4th of December. Okay, so full explanation is given there. I think it's a detailed 20-minute video. Okay, so first, please watch that video and then come back to this video. This is like a follow up video. Every trade is like a story. And I personally like to narrate the story to you. Okay. So this is a continuation of that story. So let's see what happened. So I bought the stock on this day. I bought the stock. Good closing. Volume confirmation was not there. Okay. So, but I held on to the stock because the candle completed a rising window. Now, this lesson is about trade management. How do you manage the position? Okay. So on this day, the candle closed above the yellow line, but the volume did not close above the blue line, which means price confirmation is there, but volume confirmation is not there. Normally, in such cases, I sell 50% of my position size just to control risk. As we have discussed before, there are two ways to control risk. One is by reducing your position size if you don't get either price or volume confirmation or both. So one is by reducing your position size, and second is by playing around with your stop loss. So this red color line is my stop loss. Okay. So on that day, if I remember correctly, I think I moved my stop loss from here to here. I discussed that in the previous video as well. Just check. I don't remember. But one thing I do remember is that I did not sell my shares. I did not do any partial selling. Okay. So instead of reducing the position size, I moved my stop loss up. It's one and the same thing. The amount of risk remains the same. Let's see what happens next. It shoots up, goes above the base, closes above the base, which is a good bullish sign that happens on high volume. Next, continues to go up. Next, bearish engulfing pattern. Volume is not that great, so which means institutions were not selling on that day. So I did not sell the stock. See, you have reasons to buy a stock. You should also have reasons not to sell a stock. Okay. If you are not selling on this candle, you better have a strong reason as to why you are not selling on that day, because that candle is completing like a bearish engulfing pattern. Okay. If you understand a little bit of candlesticks. If you don't understand candlesticks, that is fine. Okay. Just by looking at the candle, you know that the closing has been weak. But volume is not coming, which means what? It is the institutions are not selling the stock. Okay. Now, before we go to the next candle, let me first explain to you what are these lines. Okay. In the previous video, I did that, but let's look at these lines. The first yellow line is point number 5 in the base, which is the high of this candle. Okay. That's my buy point. The second yellow line is 1% above the first yellow line. So I have established that buying range between the two yellow lines. The green line represents my average execution price. The red line represents my 8% stop loss from the green line. The blue line represents the lower line of the rising window, which means the high of this candle. That's my mental stop loss. The red line is my hard stop loss. The second blue line is my second mental stop loss. So when the price begins to break these levels on the lower time frame chart, like a 5-minute or a 15-minute chart on high volume, that's a signal to me to start reducing my position size. So that is why those are my mental stop loss. Those are levels that I am watching. Okay. What about this pink color line? Well, that is the line at which I sold the stock. I did not sell on this day. On this day, nothing happens. On this day, I sell all my shares and I sell it here. That pink line, so 292.25 is my selling price, 286.85 is my average execution price. So roughly 1.8% return, 1.8 to 2% return. Okay. Profit is fine. That's not the point here. The question is, why did I sell? If the fundamentals are looking so strong, the company has just turned profitable. If the industry rank is good, industry rank is improving, there is a blue dot in the base. Why am I selling the stock? Well, if you notice carefully, I will give you the reason. Between this candle and this candle, there is a falling window. Between the high of this candle and the between the low of this candle and the high of this candle, there is a gap. So in Western technical analysis, they call it a downside gap. In Japanese candlesticks terminology, they call it a falling window. Okay. So between the low of this candle and the high of this candle, there is a falling window. And falling window becomes what? Falling window becomes a very strong resistance area. Okay. So it is very difficult to break the window. That is the reason why on this day, just 5 minutes before the close of the market, I ended up selling the stock because I don't like to see a stock which has a falling window above my current price. Okay, that's a very dangerous sign for me. I will give you an example of how dangerous a falling window can be and why you should avoid a falling window. If there is a falling window inside the base, just a second. See, inside the base, if there is a falling window, okay, and the current price is below the falling window, I will never buy that stock. After I buy a stock, if there is a falling window between these two candles like this, I will either reduce my position size or I will sell all my shares. In most probabilities, I will sell all my shares because falling window becomes a resistance. If you look at this stock, this is Bamal Lorry. Okay. If you see on this day, let me hide this. See, the stock created a nice basing pattern. See, mother baby candle, nice base. But you see, between these two candles, there is a falling window. So between the low of this candle is 306.80. The high of this candle is 305.90. So there is a gap. So let us draw a line at 306.80. So 306.80. Let me write it here. And then style is blue. I gave it blue color. Okay. So see, current price is below the upper line of the falling window. If you look at this is the upper line of the falling window, correct? So I have drawn a line there because the upper line becomes the resistance. So the high of this candle, which is 305.90. So let me draw a line there. 305.90. Okay. 305.90. So that those two blue lines that represents the falling window and falling window becomes resistance. There is a gap between these two prices. Okay. So now if you see, here's a nice base here. If I draw the base for you, okay, let me adjust this. If I draw the base for you like this, okay, nice base. The buy point is in the green zone. Okay. Look what happens next. It touches the falling window and it breaks down. The stock squats on that window. It becomes resistance. And you want to see what happened after that candle? Look at this. Have a look at this. After this candle, the stock just collapsed. Now, do you understand why I don't buy a stock which has a falling window inside the base? Is an extremely powerful concept that you can learn. Okay, this is one of my filters, by the way, which I teach in my courses. If there is a falling window, okay, do not buy the stock. See, if I had bought the stock on this day, held on to it, and forgotten about it, look what happened. The stock has absolutely collapsed from this candle up until here. It's a complete collapse, and there are multiple falling windows along the way. Here is a falling window. I think one more falling window I saw somewhere. Here is another falling window. Okay. So, falling windows are dangerous. Going back to Zomato. So, have a look at this. Do you see that falling window? Do you see that falling window? And do you see that this candle touches that falling window and breaks down? Now the stock seems to have recovered. Okay. But on that day, at least it broke down. Now, if the stock closes above the falling window, or when the falling window gets broken on a close on the daily time frame chart, the stock might create another basing area. So if 10 candles get completed, that falling window gets broken, I might get interested in the stock again, and I might buy back the shares that I had sold in the stock. So that pink line represents my selling price. So falling window is the reason why I sold the stock. Now, interesting thing. Wait. Why did this happen? Okay, now that is not a question that I ask myself because I'm a professional trader. I don't want to go into the news and what happened to the stock and things like that. That is not a part of a skill set of a professional stock trader. As professional stock traders, it is not the reason that is important. It is the price that is important. Price has created a falling window. It has come down. Okay, that's the ultimate result. Why it has come down, that should not be our concern, because we are tracking like 500 stocks. We are scanning 500 stocks in a week. Every stock we try to go into the details, we will experience burnout as a trader. So, as a trader, it is not a part of my skill set to find out why this has happened. But very recently, I was reading the newspaper and this article came up. Let me type Zomato latest news. Okay. You see Zomato latest news. The GST authorities slap Zomato with 803 crore tax demand. Okay. So on CNBC TV 18, there is an article. Zomato gets a tax notice, okay, including interest and penalty. Now, 803 is a huge amount. Okay. If we look at the revenue of Zomato, so if you look at the revenue of Zomato, you scroll down, okay. Annual income statement, revenue, total operating revenue, total revenue. 7,542 crore as of March 2024. So 803 crore GST penalty means almost 10% of revenue is the tax demand that has come to the company. And this news, when did this news come? This news came on CNBC on 12th of December, 8:47 p.m. This was published. Okay. And look, when did the falling window come? The falling window came on 11th of December. So how come the news was released on 12th of December and there is a falling window on 11th of December? Well, that is because the price is a leading indicator. Now, I don't know what happened, but there could be, I just have a suspicion in my mind that there could be some shareholders who probably knew of this event happening or this tax notice coming, and maybe they offloaded their shares. I don't know. I'm just guessing because the news get released on 12th of December, and just one day before that news, the stock creates a falling window. Falling window means properly the stock opens 2% below the last closing price. That's a very negative sign. The stock opening 2% gap down. Okay. How come this happened? The news get released on 12th of December and the stock starts to show clear sign of weakness on 11th of December itself. So it is my suspicion that, see, this is the stock market. It's a wild jungle. Okay. There could be some shareholders who are already aware that something like this could be happening and they offloaded the share before the news was made public. I don't know what happened and I don't care. As a professional trader, it is not my job to do investigative work. This is something that the journalists or reporters should be doing. As a professional trader, my job is to look at the chart, look at the price action, and derive some conclusions out of it and take some decisive action. Okay. I did not think even twice before selling the stock. Okay. Because I waited till the end of the day hoping that the window would close, because intraday the window can close. If the window would have closed, or if there was no falling window, then I would not have sold the stock because I already have my blue lines in place, which are my mental stop loss. I am watching those levels. The price is already above my green line. Why should I sell the stock? Okay, the price is already above the yellow band as well. So there is no reason to sell. But a falling window is a danger sign, is the first red flag. So that is why I decided to sell. Now what next? I'm out of the stock, booked like 1.88% profit. Now what next? Next, if the stock closes the falling window, which means that bad news that came, probably the effect of that bad news is gone. Maybe shareholders think, or market participants think that it is not going to be a big deal for the company. That case could get resolved, and the stock starts to go up. It closes above this falling window, so that window gets broken. It creates 10 candle on the right hand side, 10 candles on the right hand side. It creates 4 points. These parameters are not likely to change overnight. Okay, so again, when it creates that new that base, that buy point is called as a pivot failure reset. If you read Mark Minervini's book, Trade Like a Stock Market Wizard, go to chapter number 10, look at the concept called as pivot failure reset. Pivot failure reset means this pivot point, the stock breaks out, the pivot point fails, the base and the trend does not fail, the stock comes back into the base, means the pivot point fails, but that pivot point gets reset and the stock breaks out again and it starts to go up. That concept is very nicely explained in Mark Minervini's book Trade Like a Stock Market Wizard, chapter number 10. Okay, so I'm giving you the reference. Go and please check. Please take the time to study. Pivot failure reset is a very advanced trading tactic explained and highlighted and discovered by a very advanced champion trader like Mark Minervini. Okay, and that setup could come in this stock. Now, disclaimer, I don't do stock recommendations. I don't give investment tips, advice. I don't have social media. I don't have any Telegram channel. I don't have any WhatsApp group. Okay. I am just giving you my analysis of the stock. In the future, I may or may not buy the stock, even if it creates a pivot reset failure. Okay. Let me put that disclaimer because by the time it creates another buy point, these conditions could have changed, the ratings could have changed, anything could happen. And by the way, the stock is already in a late stage base. Okay, so I would be cautious. Even if I buy, I may buy a very small position size. So don't take me on face value. Don't follow my advice. Okay, I am not giving any advice. I am just providing education. So you learn from me, understand what factors I am looking for, apply the same factors to stocks. It will improve your skill as a trader, but don't just blindly follow me. I want to empower you to make your own decisions. Okay, in the future if it creates another base, I may or may not buy the stock. It depends. Okay, no investing advice, no trading advice here. You have to do your own due diligence. Okay, I'm just giving you my thought process as to what I'm expecting to happen in the future for me to take action in this company. Okay. So in last week, I made some videos on my trade entries. So I got a lot of comments about making videos about trade management or selling the stock. Now, trade management is a subject where trading becomes an art. You have to basically learn three skills: stock selection, trade execution, trade management. Stock selection and trade execution are mechanical, they are almost scientific in nature. You have to follow some set of rules or guidelines. But when you come to trade management, that is where trading becomes an art. Okay. And there are no rules for trade management. You could use moving averages to manage the trade. You could use backstopping. You could use free rolling. You could use position sizing. You could use movement of stop loss. You could sell on strength. You could sell on weakness. You could do partial selling. You could move your stop loss to break even. You could use trailing stops, back stops, tons of things you can do. That is where trade management becomes an art. Okay. In this case, it was the falling window. Okay. That prompted me to sell the stock. So if you notice, I have a logical reason to exit the stock. I did not exit because I was making a 2% profit. I exited because there is a logical reason. I am not exiting because of my thoughts or feelings or gut feeling or my hunch or something like that. I have a very specific objective way of looking at the chart. And if the chart tells me, Rohit, you should be out, I'm out of the stock. Okay. So this was a little lesson on trade management. Thank you so much for your time. Take care. Have a fantastic day today.